Welcome to today's session and thanks for joining. In these videos, I show how you can swing trade profitably in any market condition, up, down, or sideways, by taking only high probability and low risk trades that have maximum forces from the market, sector, industry, fundamental, technical, and even seasonality in their favor. I will show some stocks I traded last week. I shared the analysis publicly before knowing the results, as usual. I will explain how I am managing those. If you stay with me, I will show some stocks getting ready to buy and some that you could buy Monday. You could buy them on Friday near the close as well if you could find them in real time. Using Q systems, anyone could. Which one is better? Buy high or buy low? Earliest entry, a special case of buy low. It is as much a matter of stock analysis as it is of a trader's temperament, that is to decide whether to buy low or buy high. That which makes consistent profit for you is the better one for you. Which one works for me? I now come to that. Buying high is different from buying low. The difference is not only on the charts. And for Q traders, it is even more. It is also about the fundamentals and industries. It is about market breadth. First, let us look at technical of a stock. Buy high may mean at or near overbought condition. Buying low may mean at or near oversold condition. I prefer the latter. That serves me well. The Q indicator I use for that is stretch and release. These two indicators. Buy high may mean after price has moved up considerably. Buying low may mean after price has moved down considerably. I prefer the latter. That serves me well. The Q indicator I use for that is price extreme and sometimes reversal that comes at price extreme. Buy high may mean breakout. Buying low may mean pullbacks. I take breakouts when stop is narrow. In general, I prefer the latter, that is pullbacks. That serves me well. Q trade setups for these are flow, pullback, buying at low, and breakout, buying at breakouts. Buy high may mean buying at unsustainable high level. Buying low may mean buying at or near unsustainable low level. I prefer the latter. That serves me well. The Q indicator that I use for that is jump thrust. Buy high may mean at resistance. Buying low may mean at support. I prefer the latter. That serves me well. Q indicator for support resistance are memory trend line and watermark pivot. From technicals, we go to fundamentals now. Buying high may mean buying overvalued stocks. Buying low mean buying undervalued stocks. I prefer the latter. That serves me well. Q indicator for that is valuation score in Q Vital. Buy high may mean high growth stocks. Buying low may mean low growth stocks. I prefer the former. Here I prefer buying high. high growth stocks rather than low growth stocks. That serves me well. Q indicators box stocks, thanks to Mr. Ian Woodward, may him rest in peace. EPS growth and revenue growth from Q Vital. Buy high may mean high dividend yield stocks. Buying low may mean low dividend yield stocks. I prefer the former. Again, like growth stocks, for dividend yield also, I like to buy high. That serves me well. Q indicator dividend yield percentage in Q Vital stock scorecard. Buy high may mean industry that is strong for many months already. Buying low may mean industry just turning into strength with acceleration. I prefer the latter, though sometimes I may take the former. That serves me well. Q indicator for that industry score, pace score in QH. Buy high may mean buying market and pocket internals that are overbought. Either the whole market is overbought. Now we are not talking about stocks, individual stocks, but the whole market or pockets of market like small cap, mega cap, etc. Buying high may mean buying market or pocket when internals are overbought. Buy low may mean buying into market or pocket where internals are oversold. I prefer the latter, that serves me well. Q indicator for that from Q market breadth are 3-month new high low, Eureka Phoenix, again thanks to Mr. Ian Woodward, percentage of stocks above 50-day moving average, etc. I look at them individually, but sometimes several of those dimensions come together. Those are even more high probability and low risk trades. Q finds them for me. I focus on selection, selecting a few from all the possible buy candidates. I decide on strategy whether to buy it for a little bit longer term or swing trading. I decide whether to buy using stocks or using some option strategies like naked short put vertical, covered call, etc. I focus on risk management and trade management. That is where I spend my time on, not on the technical, fundamental, or industry analysis. Q does that for me. One tends to gravitate to one kind of trade, buy low or buy high, or the other. Does not mean they cannot take other trades from time to time. For me, buying low is the primary style. What is earliest entry? Earliest entry is a special case of buy low. You would usually not buy a stock, or at least I would usually not buy a stock before this earliest entry point in a stock that has fallen a lot. So stock has fallen a lot and earliest entry is the point where you would buy or I would buy for the first time, not prior to that. It is a special case of buy low. That is not the only trade I take. I take other buy low trades also. But today I may focus on earliest entry trades more. We'll see how buying low and specifically the earliest entry trades made me a profit in the current market, even in the last week when many others might have lost money. Greetings. I am Sagar Nandi, retired IT professional, swing trading stocks in the USA and India markets. I created the Q systems and techniques. You may contact me using my email ID info@superiorprofit.co and tradingprofitably@gmail.com. I regularly share live market and stock analysis on my website superiorprofit.co, X handle Superior Profit, and YouTube channel Trading Profitably. All these are open to the public. You are most welcome to make use of them. Q runs on Metastock, all the components, and the technical analysis part runs on TradeStation as well. It has multiple components. I will try to use many of them during the live session. Disclaimer, this demonstration is for educational purposes only. I'm not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. Options trading can be risky. You may refer to the characteristics and risks of standardized options document from OCC to decide if options trading is suitable for you. Many of the trades I will share were bought at an extremely low point. I always do not do that. These trades happen to be like that because certain pockets I thought of buying were extremely oversold. What does it mean? This is a snapshot from the previous market recap, where I showed that Dow Jones Industrials and Russell 2000 were two pockets that were not only oversold but extremely oversold. So oversold in terms of the 3-month new high-low oscillator that a move up from there was likely. The same was true to a large extent for S&P 1500, almost hitting the extreme oversold condition from where a move up was likely. Move up of what? Move up of many stocks that had fallen a lot. How did these market indexes changed in the current week? This is the picture from the current week. Dow Jones Industrials in fact went from oversold to overbought condition, closed bullishly in the upper half. Dow Jones Industrials has about 30 stocks only. It is not uncommon for it to move from oversold to overbought, overbought to oversold, overbought to oversold, oversold to overbought very quickly because of the smaller number of stocks in the index. The other indexes have more stocks. It takes time for the 3-month high low to move from overbought to oversold, overbought to oversold, etc. The other index that was extremely oversold was Russell 2000. It moved up as well, and so did S&P 1500. Because these two pockets, primarily DJI and Russell 2000 and to a large extent S&P 1500, were extremely oversold. That is why I focused on sharing some of the stocks that were also oversold. and that gave rise to the early entry opportunities. Let's look at some of them as I go along with the market recap. Why not start with the total view market internal health check? A single page view of the whole market's internals. Last week was a shortened trading week, 4 trading days, not 5 trading days. One Bango came in recent days, and the overall market total view custom index is continuing to go up. There is not much of a change in the current week. The percentage of stocks above 50-day moving average is continuing to slowly come down. It is now in the lower half, near the middle, but in the lower half. That is slightly bearish but not oversold. The 3-month new high low continuing to come down overall in the lower half but not oversold. A change from previous week happened in how the different pockets moved, growth versus value. Earlier, growth was outperforming. Now, growth is underperforming. Small cap versus large cap. Earlier, small cap was underperforming. Now, they are equal performing. So, from this chart, we see the key change is in how these two different pockets, growth versus value, and small cap versus large caps, are moving. Small caps are starting to do little bit better relative to earlier. Value stocks are starting to do better, and you would notice the stocks that I'm going to share, many of them are value stocks. Maybe small cap, maybe not small cap. Small cap was underperforming. So the stocks I'm going to share are not necessarily small caps, but they are value stocks mostly. Let's look at the market ETFs starting with SPY. That is the market external view. After market internal view using Q total view, I'm now moving to external view SPY. Weekly continuing to be bullish in color, though the shape is indecisive and we have a bearish indecision at the top. That is not a trade setup, that is a possible early warning signal, but there is no bearishness in the weekly chart to take a short trade. In the daily, we have a bearish headwind on Thursday, but that candle shape was indecisive. Price did fall down on Friday, which also displayed a bearish indecision and a bear release. So it is not overbought anymore. The bulls gave away to bears, at least for the time being. Friday's candle shape is indecisive. It did break below the trend line support. So if I was holding long position in SPY, I would be cautious, but there is no short trading opportunities. It will not change to downtrend anytime soon, as I mentioned in previous market recap also, because there are many trend line supports and also yellow direction line support one after another. The two questions that I always ask when I look at an instrument, let's answer them. Trend, uptrending, preferred trading direction, none. Uptrending but displaying bearish headwind, breaking down below one trend line support, not a time I'd like to buy, stand aside. QQQ. Similar to SPY in many ways, weekly color bullish has bearish indecision at the top. Daily gave a bearish headwind on Thursday. Friday gave a bear release signal. Trend uptrending, preferred trading direction, stand aside. Above upper boundary, too late to buy, has some warning signals from bearish headwind, bear release. Not a time to buy, but there is no short setup. Dia, this was the pocket that was extremely oversold 1 week ago. And as we would expect from the 3-month new high low, Dia indeed moved up. It became the best performer of the market ETFs this week. If you looked at the 3-month new high low and if you wanted to trade Dia or the futures YM, the buy point came on Tuesday or Monday, maybe this day. Which day was it? 17th June. Monday. Monday, Dia went up. That was in line with the fact that the 3-month new high low was extremely oversold. A recovery was likely. In fact, on daily charts, it gave a flow trend following long setup as well. That would be the time to take a long position in Dia or futures YM if you are trading futures. That would be giving a reasonable profit by the high of the week. Friday's candle is indecisive. So Friday I would not like to take any long position in Dia. What is the trend? Now it has higher low and higher high. So uptrending. Preferred trading direction right now in Dia is none because it has already gone up from swing low. But I would not mind looking at industrial stocks to buy and enter them if Dia continues to go up. Dia itself I will not buy now, and of course there is no short trade setup. Lastly, IWM. As we would expect from the 3-month new high low of 1 week ago being in extreme oversold condition, Russell 2000 IWM also went up, but it is not as bullish as Dia because the backdrop color remained magenta in weekly, bearish. There was a bullish headwind on Monday, came at the very low, at which point it also created a false downside breakout at the watermark support. If you are trading IWM or the futures RTY, you could try to enter it on Monday as it was creating the false downside breakout. As far as swing trading is concerned, again I mentioned in the last market recap itself, then even if price went up, I would not like to buy IWM as such. But there are many small cap stocks that were oversold and that probably went up. Those could give lucrative buying opportunities. Maybe some earliest entry opportunities as well. We look at some of those stocks momentarily. As far as the external view is concerned, it is not giving me the confidence to buy. In fact, at the end of last week, looking at 3-month new high low being extremely oversold in Dow Jones Industrials Russell 2000, very close to being extremely oversold in S&P 1500, I expected some of the stocks to move up move up enough to give me profitable swing trades. That happened, but that did not happen for IWM. That is why it is important to not only look at the indexes or ETFs or futures, but to drill down, probably using Q index constituent analysis, see which exact stocks are going up. If they are fundamentally strong and in strong industries, they may give, and they did give, lucrative buying opportunities. Let's continue with the market level view. Let's look at Q Edge sector industry stock breadth. 1 week ago, it was very bearish, and I was expecting a move up. Move up not necessarily in the market indexes, but in this breadth inside. I always say breadth inside is more important than looking at the futures. Not that the futures are not important. I look at the external view of futures as well, or indexes or ETFs, but the internal view is what is the primary driver to decide my preferred trading direction. And my observation 1 week ago that I was going to shift to the long position, that analysis was timely, which also means profitable, because this week, relative to 1 week ago, it was more bullish relative to 1 week ago. The 1 month period is still bearish across sectors, industries, stocks. 10-day, also a longer term view, is also bearish. 5-day turned neutral, especially at the more granular industry and stock level, and 2-day and 1-day periods are bullish. This was a holiday shortened week, but the transition from red color here to green and more green over 2-day and 1-day periods show that there were some profitable swing buy opportunities this week, and I took some of them. What about technical breadth? This is the weekly technical breadth. If you remember, the videos are on YouTube channel. 2 weeks ago, we had bearish headwind alert. From there, price fell. 1 week ago, this picture was primarily bearish, magenta color. From bearish headwind alert, price fell. It remained bearish, but the bearish headwind signal went away. And now, it has turned primarily bullish. Again, my last week's view that it was time for me to start buying was timely, also known as profitable, because overall the technical breadth this week is bullish. So from bearishness it turned to bullishness. Some stocks went up. I could find them at the perfect time using Q. What about Friday's technical breadth? Daily technical breadth, that is mixed overall. So when I put all these breadth analytics and the market external view together, I see that the market recovered from 1 week ago. I took some buy trades, many of them, most of them were profitable, but as of this week, I am a bit indecisive whether to go long or go short. How will that affect my trading? I may try to book more profit in my long positions and then wait to see what the market is doing. I'm not going to short now. There is no short signal, but on the bullish side, whether I look at the market external view or internal view or the technical breadth or the sector industry stock breadth, it did not turn as much bullish as I wished it would. It went up, but not as much bullishness I see. And some of the candles in external view are indecisive. So I am not going to buy many new stocks now. Having said that, I will look at some opportunities you could consider buying on Friday, and you may consider buying them next week as well. Let's look at some stocks now. First, a few stocks that I identified in the last market recap. Hasbro, HAS. In the last market recap, we were here. That time it had a breakout long setup, and this is a stock I selected. Last week's webinar theme was comparing before buying, and I showed that Hasbro HAS was better from Q multidimensional analysis relative to MAT, Mattel. Both are in the same industry. From there, the stock went up. The backdrop color turned bullish. Of course, the stop was never even approached. So if you bought the stock based on the Q analysis, you are probably still in the trade with a small profit. That is interesting because overall the market was weak last week. Let's look at the weekly view on this radar. The market ETFs went up, but not a lot. Dia was the best performer, as I already explained. Other than Dia, none of the market ETFs went up by more than 1%. This is the whole weekly period. IWM was the best performer. Once again, 1 week ago in the market recap, I showed that Dia and IWM were showing from market internal health check that they were extremely oversold. A recovery was likely, and indeed they turned out to be the best performers. The other two, SPY, QQQ, not so much. That probably means the mega caps did not do that well. Hasbro is not a mega cap. It is doing what we would expect it to do based on the breakout setup. Where is the breakout setup? Is here. If you switch the template to the template that shows the historical trend lines, 1 week ago this was the breakout setup, and it also had a bullish flow. So Hasbro worked well. The other stock that I analyzed last week was PZZA, Pizza, Papa John's. Again, last week's theme was compare before buying. I compared it with BLMN and showed that Pizza, PZZA, was a better stock to buy. Both were at low price level. This week we can see PZZA went up a little bit, not much. In the last market recap, I mentioned, and we were here at that time in the last market recap on the red candle, I mentioned that if it could clear out of the sideways range, then I would not mind buying it, and that would be an earliest entry opportunity. Why? Because the stock fell a lot. Let's now apply the concepts I shared in today's session, buying low. It fell a lot even in weekly. So if I am buying now, it is buying low, not buying high. It's buying low. Jump thrust came to unsustainably low level, unsustainable low level. Jump thrust, unsustainable low level, buying at that time, that is buying low, not buying at unsustainable high level, but buying at unsustainable low level, buying low. Buying when it is making a base at a low price level, meaning at price extreme low. Buying at price extreme low, not price extreme high, that is also buying low. Then came the bullish headwind, which tends to come at a lower price level. Bullish headwind comes at lower price level, bearish headwind comes at higher price level. Here bullish headwind came, so again buying low. See how all the different buying low dimensions are coming together. Price extreme low, jump thrust low, bullish headwind, bull release. Again buying near oversold condition, not buying near overbought condition. Buying near oversold condition is buying low. Then of course came the big move up 3, and this big move up 3 pointed to the earliest entry opportunity. I shared it in the last market recap here. It did try to go above this sideways range, but then immediately fell back with a cluster of bearish indecision. Not one, but a cluster of bearish indecision. So if you or I did not take the trade, we would wait. And now it is coming near the trend line resistance, coming near the tip of the triangle pattern. So even if it moves up, down, tries to go up, I will not buy now until at least the first trend line resistance is broken. Let me clear the lines. When I was here, I was not near the tip of the triangle pattern. I was okay to buy, and I would try to book some profit if price hit the first trend line resistance. But now even if it tries to go up, will come very close to the tip of the triangle pattern. What it means is that my profit distance to the trend line resistance will be very small. So I would not like to buy now until it breaks at least the first trend line resistance. That will still be the earliest entry opportunity in the stock. Now in this case, once the first trend line resistance is broken, it will come very close to the declining yellow direction line resistance and then another trend line resistance. So I may be extremely cautious about buying even if the first trend line resistance is broken. If all of them are broken together, that will be a good sign. And if I can catch that breakout using real time breakout signal here, that is even better. But just breaking the first trend line resistance will make me interested, but I'll still remain cautious until the next two resistances are broken. Let's apply this week's concepts. Buying near resistance is buying high in a way. I avoid that. I mentioned that. I tend to buy low. So buying near support, this trend line support, this watermark support is my style. When it comes near too close these resistances, then I am not buying low and I try to avoid that. In any case, the two stocks I shared last week acted all right. One went up, Hasbro. Pizza continued to move sideways. And the only other stock I shared last week was LH, LabCorp Holdings. Shared it on this day, had a bullish flow setup in daily. This was the day when I shared the bullish setup. it has gone up. Again, let's apply this week's theme. Buying near support, that is trend line support in weekly, also near support in daily. Buying near support is buying low. Buying when jump thrust is low, that is unsustainable, low price level, is buying low. Buying near watermark support, on top of that, buying when it creates a false downside breakout is buying low. I prefer that. Bullish headwind comes near the low price level. Buying near bullish headwind watermark level with false downside breakout is buying low. Of course, the fundamentals of all these stocks were strong. So I bought at low price level. When it came near the trend line resistance and the white direction line, I booked full profit in the trade. The profit was more than the risk taken in the trade. So that was a point for me to start booking profit, and because there were multiple resistances, I did not hold on to partial position. The resistance was in weekly chart as well. Buying low, even in terms of price extreme low, and booking profit at a higher price level. That is my style. Now let's move on to some stocks that I shared earlier and also during the week. One was BHC, Bosch Health Companies. Let's apply the theme of buying low. Buying at unsustainable low price level in terms of jump thrust is buying low. Buying when bullish headwind starts to come is buying low. Buying at price extreme low on top of that with a bullish reversal is also buying low. Buying at watermark support in daily as well as weekly is buying low. I first shared the buying opportunity somewhere here in YouTube video. Price was still below trend line resistance at that time, and I mentioned how I decided the trading strategy. I used a covered call with call at 7 strike far away expiry. The stock is doing what I expected it to do. I bought low, a fundamentally strong stock as per Q scorecard. It broke all the trend line resistances that were nearby. The next trend line resistance is far away, and that resistance is far above my short call strike. It is very close to the short call strike. Once it reaches the short call strike, I may book partial profit in the position. I already have a nice profit in the trade. And remember, I bought at a low price. That is the theme of this week. In fact, if I go to the weekly daily, you can now see this was also one of the earliest entry opportunities. They tend to be extremely lucrative in terms of low risk and higher reward possibilities. In this case, I used a longer term short call for the covered call position. So I was trying to book partial profit, which I will do soon. I could do that on Friday. I did not do that. I will soon book partial profit when it comes to my short call strike or comes near the declining yellow direction line, and I will try to continue to hold the remaining position. And this ability to continue to hold partial position after booking partial profit makes these earliest entry opportunities extremely lucrative. The same thing happened in another stock that I shared recently. All these I shared before knowing the results. I first shared the stock somewhere here. Let's apply the concepts of buying low. Buying at support, weekly trend line support is buying low. Buying at daily trend line support is buying low. Buying at watermark pivot support when it creates a false downside breakout is buying low. Buying when bullish headwind, in this case a cluster, appears is buying low. Buying at bull release signal is buying low. Many of them came together. I bought around this point. I shared it at this time. When the risk distance was covered, I booked partial profit. Then I applied trailing stop, and the trailing stop was already above my buying price. Currently the trailing stop is here using the Q protection signal. When I first started the trade, stop was here. Once the partial profit was booked, when risk distance was covered, I raised my stop on the remaining position, trading stop. From initial stop, I made it to a trailing stop using the same Q protection signal that was not hit. And on Friday, it broke out of the trend line resistance. So it is giving another buy trade setup on Friday. In fact, on Friday, it is giving probably a flow long setup and also a breakout long setup. Now we don't have to leave it to guesswork. We can put it on Finder. We could do that on Metastock, or here I am doing on TradeStation. Indeed, it gave a breakout as well as a flow setup with a fan out pattern. Remember what I mentioned. This also was bought. I shared it here at very low price level, and in fact it was the earliest entry opportunity after this downtrend. What is an advantage of earliest entry opportunity is that we can book partial profit quickly and then try to ride the up move if it continues to go up with a trailing stop, as I am planning to do in Excel. I am in no hurry to close the remaining position. My trailing stop is above my buying price. Both in BHC and Excel, I am able to do that because I bought them at the earliest entry opportunity. One more stock that I shared, and in fact that was also a possible earliest entry opportunity, was SLB, Slumberger, an energy stock. It fell a lot in daily and weekly, came to jump thrust low. Buying at jump thrust low is buying at unsustainable low price, that is buying low. Then it gave a bullish headwind that comes at the low, buying low. Buying at watermark support, when the support held, is buying low. Buying at price extreme low is buying low. And if I switch to the historical trend lines, I shared the trade idea on this day, mentioning that if it could break out of the trend line resistances, that would give a breakout setup. However, the bullish headwind came earlier. Let me go back to this chart. Bullish headwind came one day earlier. I took a buy position, long position on this day itself. My stop was very narrow. It was trying to get an earliest entry trade. However, next day I saw the breakout did not confirm. I had a nice profit relative to the risk taken. I did not wait. I booked the profit in the trade. And this is one way I have changed since the time I started trading several decades ago. I am not shy about re-entering the trade. So I took the trade based on the bullish headwind at unsustainable low price, at price extreme low, at watermark support. I booked profit when the trendline resistance was not broken, but it did get broken the very next trading day here. And I have re-entered the long position in SLB. So I have a long position in SLB. If you look at the weekly chart, what do we see? We see a long-term watermark support. Buying at long-term weekly watermark support is buying low. That is the theme. This is the first week that we have bullish backdrop color after many weeks. That is a turnaround candidate in the weekly chart. We have a bull release signal, that is buying near oversold condition, that is buying low. So I am buying low here in not only daily but also in weekly, and I am trying to get the earliest entry opportunity once again. How was its fundamentals? Let's look at that. This is a stock you could buy on Thursday. I did that, re-entered it on Thursday. It did not move up much from there. You could look at the stock next week also and try to get maybe even a better feel than my stock entry if it comes down a little bit and starts to go up again. By the way, if we applied the theme of previous week, compared before buying, I did compare SLB with a very equally well-known peer stock, RIG. RIG and SLB are in the same industry. Fundamentally, SLB looked much better. And why I say that? You saw, and let's go back to the stock fell a lot. However, when I look at the fundamentals, see the earnings growth in the last 3 quarters. 23.8, 21.1, and then 19. It came down, but not much. It is still having a high enough earnings growth. Not very high, but high. Revenue growth came down, but not a lot. It is a profitable company in whichever way you look at it. Funds are accumulating. Payday non-negligible, not very high in the current interest rate environment, but non-negligible. Dividend yield of 2.4%. Steadily going up, strong earnings quality. That is a stock I bought. Now, if you would keep this picture in mind, let me try to get the scorecard for RIG. RIG or no, Hell, sorry, not Rig, Halliburton. Hell. Okay, I have the scorecard. I made a mistake. Sorry about that. It's not Rig. The well-known peer is Halliburton for SLB. Let's look at the two stocks in the scorecard, SLB and Halliburton, not RIG. Sorry about that. Let's look at their scorecards. Both are medium valued. Now, what I showed for SLB, the stock that I bought, the earnings growth came down but little bit. Whereas for Halliburton HAL, the earnings growth came down much more, from 31.7 to 19.4 to 5.6. This is a much sharper decline than for SLB. So I preferred SLB looking at that growth. Also, SLB pays a dividend yield of 2.4%, HAL 2%. From dividend yield perspective also, I prefer SLB. Earnings quality is better for SLB, so I prefer SLB from that angle as well. Remember, I explained that for earnings growth and for dividend yield, I don't buy low, I buy high. So I bought SLB at higher growth, at higher dividend yield. On technical charts, it is buying low, and in fact, it is buying at the earliest entry opportunity. The second time I am long the stock in last 5 days. Now let's come to a few stocks that I probably did not share, and you will see how I'm applying the concept of buying low in these stocks as well. Let's look at this stock BMY. In the weekly jump thrust low, unsustainable low price. In daily also we have thrust low, very low price at price extreme low, that is buying low. Buying after bullish headwind comes is buying low. Notice that after jump thrust low, price extreme low, we already had big move up 3. That is the earliest entry opportunity. It has a bullish indecision cluster and a false downside breakout at watermark support in daily as well as weekly. Buying at support is buying low. However, buying at resistance is buying high. So this is not a stock I would buy on Friday, not using stocks. There comes the strategy part of taking a trade. If I am trading stocks, I would not buy it on Friday. I would add it to watch list, and if next week it can break out of the trend line resistance right at the point of breakout, I would like to buy it. Buying low, and also this would be keeping to this week's theme, buying low as well as earliest entry opportunity. Let's look at the stock's fundamentals, and then we will see that is there another strategy feasible other than buying the stock. Instantly the scorecard shows that. Remember, when looking at total view, I showed that value stocks are starting to do better relative to growth stocks, and this is also a value stock, undervalued stock. Undervalued stock. The dividend yield is very high, 5.7%, and that's why I mentioned that there could be other trading strategies than just buying the stock. And I use that. I am already holding a bullish position in BMY, entered on Friday using real-time charts, so I did not enter it at the close. I entered after it opened with bullish signals. Let's look at it using Finder. I could use Metastock or TradeStation to look at the real-time signals. It has a squeeze move pattern, very attractive pattern for many traders. Mr. Mark Minervini talks about it. It is codified in Q systems in a remarkable fashion, may I say that. An indecision cluster pattern, price extreme low pattern. The stock is still in a downtrend. These are pointing to buying low with attractive squeeze move and bullish indecision pattern. And notice that it opened with a gap up. So I was already tracking the stock, high dividend yield stock, as an earliest entry opportunity stock. It opened with a gap up, then I looked at it using the pivot chart. I'll not go to that, the intraday pivot chart. I took a long position in the stock. Looking at the dividend yield, I don't mind holding it long term if I need to. I don't want to, but if I need to, I don't mind it. So I traded it using short put. And as it closed at the very high, I also bought some stock in anticipation of a breakout. I could also wait for the stock buying, but I bought some again because the dividend yield is there. No harm holding the stock for me, for my risk tolerance, for the dividend yield as a safety net. As a safety net. Not that I want to end up with 5-6% annualized return, but that is a safety net. I would like to go out of the stock with much higher annualized return. And I think I will be able to do that. Let's see. But worst case, I'll end up with a nice return using the short put and then also the long stock position. Again, a buy low concept. And if you are buying stock, just buying stock and not considering it a dividend play, then I would suggest waiting for the breakout. If you are okay with a dividend play, holding the stock for the dividend long term if required, then you could enter it on Thursday itself as I did. Sorry, on Friday itself as I did. Few more stocks. Some speculative a little bit, some not so much. Gilead. Again, buying at jump thrust low, that is unsustainable low price level, buying low. Buying at price extreme low, buying low. Buying after series of bullish headwinds came, then a false downside breakout at the watermark created by the cluster of bullish headwind. All these are buying low. Came a big move up 3 at a very low price level. In fact, the big move up 3 came here also. One could start to acquire the stock from this point. That would be, in fact, this would be the earliest entry opportunity. And then another re-entry opportunity came on Thursday. Not before that, because there was a trend line resistance before that. So on Thursday, this trend line resistance was broken. I noticed it at this point, and as of Friday's close, I have a long position in Gilead and I used short put. I do not have a long stock position, but I have a short put position in Gilead. Let's look at its fundamentals. Back to this week's theme, buying low. Buying undervalued stocks is buying low. It also has earnings quality, good earnings quality. And for dividend yield, I like to have higher dividend yield. It has a nice dividend yield of 4.3%. So I took a long position in the stock. In an overall weak market, 75% of peer stocks, biotech, pharmaceuticals went up. So I took a long position in this. This also is not only buying low, but an earliest entry opportunity after this long down move. Okay, let me correct myself. The earliest entry opportunity was actually at this point. Thursday was the second earliest entry opportunity, if you want to call it. Now, to progressively speculative stocks. Yes, I know I am beyond 1 hour point, but I think this theme of buying low and especially the earliest entry opportunities that can be very lucrative, they often are very lucrative if you are able to buy in fundamentally strong stocks. And if you notice, so far all the stocks I shared are actually fundamentally strong in terms of valuation, in terms of dividend yield. But now let me share some more speculative stocks. What I mean by that, the fundamentals may not be so strong. Technically, they are giving or about to give buy low, and not only that, earliest entry opportunities. This is ACAD, again a pharmaceutical stocks. You will notice many of the stocks I am sharing are pharmaceuticals, biotech, including EXEL, Gilead, BMY, and now ACAD, ACAD, Acadia Pharmaceuticals. Sharp drop, jump thrust low, and if you scroll back, even clearer, jump thrust low, unsustainable low price, buying at bullish headwind, buy low, buying at watermark support, buy low. Gave a big move up 3 on Friday at price extreme low. It did close below the trend line resistance, tried to go up, closed with 3.7% up move, but did not break the trend line resistance, multiple of them. Weekly turned bullish in color, bullish in shape for the current week. If it breaks out of the trend line resistance, it will give a buy low, and not only that, earliest entry opportunity. This would be the first buying opportunity possible with low risk, much higher possible reward, not guaranteed but possible reward if it can break out of the trend line resistance. But its fundamentals are not so good, and that's why I mentioned that these last two stocks are of somewhat speculative nature. They are not 360 degrees trades. What do I do with such stocks? If I take them, I reduce my size, and I did take a long position already in ACAD, but I reduced my size, and you can see I am expecting a breakout and took a trade. The breakout is not confirmed yet, that part. What I am doing is deciding on a stock and sometimes taking an early entry before the proper setup is confirmed. But in that case, I am very clear in my mind, I reduce the size. It's also a value stock. Strong earnings quality, a short squeeze potential, insiders are buying. These are the things I looked at when I decided to take an early entry even before the breakout is confirmed, and it is steadily going up. Why I said it is not fundamentally very strong, because this is a biotech, not a small cap, it's a mid cap. I can see that from the color yellow here, but it is making loss. EPS last 12 months is showing that. EPS last financial year is also showing a loss. EPS last quarter has a small profit, but if you followed the stock, and I am following the stock, I am following certain stocks sometimes that are at jump thrust low, price extreme low, looking for the earliest entry opportunity. So you can see the last quarter it had positive earnings, but if you are following the stocks, you would know the stock actually fell after earnings. That's why fundamentally I think it is not so high. Earnings growth is high, but it came down. Interesting. Earnings growth high, came down. Last quarter's earnings positive, which is not so over last 12 months or last year, but it stabilized at this base. Every time it tries to go down, it stabilizes at the watermark support, and I am watching it for a while. This was actually the last earnings drop, if I remember correctly, and now it has a big move up 3. I am already holding a long position. I may not mind adding to the long position if the breakout confirms. Here the options are not liquid, so if you buy, you may consider buying the stock. Options are very illiquid for ACAD. I have a smaller than usual size position in ACAD. And the last stock, again a speculative stock, maybe even more speculative than ACAD I am going to share, is ACHR, and it is not a pharmaceuticals biotech stock. It is in an industry that is in the news a lot, aerospace defense. We have several conflicts going on around the world. I hope they come to an end soon everywhere. Let people live in peace. It is an aerospace and defense stock, but it is a loss-making company. It is ACHR, Archer Aviation. Whichever way you look at it in terms of earnings per share, it is making a loss. So it is even more weak in terms of fundamentals. It has a short squeeze potential, that is buying low in a way. Insiders are not so bullish as was in the last speculative biotech, that was ACAT. That's why I mentioned it is not strong, not in terms of earnings growth, not even in terms of valuation. This is very weak in terms of valuation also. So if a stock is so low price level, I'll show you on the chart, and still it is showing overvaluation, that is not a fundamentally strong stock. That's why I said upfront, this is very speculative stock. Why it came to my notice is because it had a massive up move on Friday, 17%. And though it is a 17% up move, if you look at the chart now, the up move is just starting. Don't know it will continue or not. Let's apply this week's theme, buying at unsustainable low price. Jump thrust low is buying low. Buying at price extreme low is buying low. Buying with a or after a bull release signal is buying near oversold condition, that is buying low. Buying near watermark support is buying low. Buying at breakout is buying high. So I mentioned sometimes I take breakouts if the stop loss is narrow. If you look at the percentage move, and the percentage move changed based on some price change after market close, still a sizable up move, 16% plus. If you look at the percentage itself, the stop is far away. Percentage 16% or more than that. In fact, if you consider this little candle, about 19-18% distance for stop is far away. But the up move is just starting. Again, we'll not know if it continues or not. It had huge up volume and a big move up 3. Now, if this pattern was in a fundamentally strong stock, what pattern? Jump thrust low, price extreme low, big move up 3, I always buy. Here it is not fundamentally strong. So I took a small position, and like ACAD, it is not a 360-degree trade, so I reduced my size. What I'm thinking is that if it pulls back and holds this support, starts to go up again, maybe clears these extended trendline resistances, maybe I'll add to that position. If it falls down, goes below the recent low, I will cut my loss. If it goes up right from here, I'll try to book partial profit near the next resistance, that is the white declining direction line. That will give me enough profit relative to risk taken in the trade. So I have taken a smaller than usual, and again this is not a Q360 degrees trade. Technically it is buy low, that's why I shared it, and this is also an earliest entry opportunity. One would not, at least I would not buy it before Friday's breakout. I bought it on Friday after the breakout, speculative, smaller than usual size. That is how using Q and not only technicals but combining with fundamentals, I did not look at all these stocks industry score. You would know many of them were weaker earlier, the industry scores, turning bullish now. Some are bit patchy, maybe defense is a bit patchy, neither bullish nor bearish, though it may show acceleration over recent days, but the pharmaceuticals are looking good. So they are buying low, and technically many of the stocks I shared today are in fact the earliest entry opportunities. They can be extremely lucrative if you can catch them at the right time. Let me end today's session here. Thanks a lot for attending. I look forward to seeing you in my next session. Have a great weekend. And as I always say, as these live examples and the follow-ups hopefully show, there is no reason not to do that. Trade profitably. Thank you.